Imagine price creates a clean swing high. Nothing special, right? But now think like a trader. Someone sells near this high and places a stop loss above it. Another trader does the same, and another. Soon, that obvious high isn't just a price level anymore. It's an area containing a concentration of orders. That's what we mean by liquidity. And here's where it gets interesting. The market doesn't need to want liquidity. It simply needs to reach an area where orders are available. Because once price trades above that high, those stop loss orders become market orders. So watch the sequence. A high forms, stops accumulate above it, price approaches the high, price trades through it, stops trigger, that liquidity gets consumed, and that's a liquidity sweep. But here's the part most beginners misunderstand. A liquidity sweep is not the same thing as a reversal. The sweep only tells you that orders around that level were triggered. What happens next depends on what the market does with the resulting order flow. Sometimes price sweeps the high and continues higher. Sometimes it sweeps the high, fails to hold above it, and violently reverses. That difference is extremely important. Because now you can stop looking at a wick and start looking at what happened around the wick. Was the level obvious? Were there equal highs? Was there a previous swing high? Did price actually trade through it? Did it accept above the level or immediately reject it? These questions tell you much more than simply saying liquidity was swept. And the same logic works below price. A clear low forms, stops accumulate underneath, price trades below the low, those stops trigger. The liquidity is consumed, and again, price can either continue or reject the move. So the real lesson is this: liquidity isn't a line. It's a concentration of orders around a price level. And obvious highs and lows become important because traders naturally place orders around them. That's why the next time you see price approaching an obvious high, don't immediately think breakout. Ask yourself, what orders are waiting above it? Because sometimes, the most important part of the move isn't the breakout. It's what happens after the orders get triggered.